Everyone is able to share, or everyone is able to see my screen?
Yes, yes.
Okay, right now, cool. Fine, guess it's 9:05. We'll just start with that. Just going to the Telegram channel. And we will be talking basically about intraday trading in Nifty. I'll be only specifically talking about Nifty, not Bank Nifty. How to decide direction of market. This is the first and most important part. Second would be the signals and confirmation. Now, signal is different part and confirmation is a different part. I'll talk about that in detail. Third is target setting. Fourth and most important part is stop loss and trailing your stop loss. Right. Fifth is taking trailing small reversals and long reversals. I'll also talk about this in detail. Right. Before that, we need to first, and the most important thing is know about the unit of technical analysis, what exactly that is and how it functions. So for that, I'll just quickly take you through across the bull and bear cycle. Anyone who is new probably just wants to understand that part, or maybe just as a revision part. We have taken 4 bull and bear cycle. One is starting from 2004 onwards till 2008, 2008 to 2012, 2012 to 2016, 2016 to 2020, right? In these 4 cycles, what we observe is if we start from the low of, that is the initial phase of bull cycle, to the end of bull cycle and see the reversal, which is the bear cycle, it generally comes at 2 points. One is either 0.236 or 0.5. These are the only 2 points where, guys, my request is if you can just mute yourself, it will be much more easier for us to understand. And if
I think Chetan, you have control to mute everyone.
That is there, but again, what happens is it becomes very tedious, especially in Zoom, to go back and further for those things. Again, it wastes everyone time who is there. That's it, nothing more. Again, not able to understand who is these guys who are there from the backside.
Just mute them. They will hand raise then when they want to speak.
Yes, yes.
I guess everyone is on mute as per my understanding. If it's not there, please let me know in repeat. So, fine. So coming back to our part, what we see is generally in the bull cycle and the bear cycle, the reversal is generally either at 0.236 level, which is there, or at 0.5 level, that is there, right? So we go on on the same fundamental basis that, okay, either we'll be getting a reversal at 0.236 or at 0.5 levels, right? And we should be trading on the basis of these 2 levels only, right? So this is in short and simple language. If anyone who is not aware about this part, probably they can go back to the Telegram channel, and the YouTube videos for chapter 1, 2, 3 are been given in details for that part, right? Second part is how to understand direction of the market. Now, this is the most crucial part. Once you understand the market, how it functions, and how exactly the reversals do happen, then it becomes much more easier for every one of us to trade across, right? I'll just quickly take you across through the bull and bear cycle. Probably just one of them, not all of them. Probably I'll have to take this in this part only. I'll start from a previous period so that it becomes much more easier. I've just marked few of the details on those parts. So this is starting from our start of this current bull cycle. I'll just try to explain in detail. See, because what happens is once you understand these daily cycles, things would be much more easier for you to understand how we should be playing across for intraday trading, because direction is most important in those parts, right? Say this was the end of the bear cycle and we started from here, right? Now what exactly happened on those parts is, first of all, we got this first leg, right? Understand these parts. If you don't understand this part, please ask me. I'll try to revise that. Probably we'll try to have one more webinar for this part, but this is the most important and the crux of this unit of technical analysis parts, right? See, what happens is, first of all, you get one leg, the first leg, right? Now again, understanding how the first leg is being formed, it is probably been happening in the same direction or in the same way. Let's say, for example, I have marked this low and high. It's not necessary that the low and high would be starting or maybe happening in that day only. But we know that, okay, this is the low of bull cycle, low of the bear cycle. So initially, once this bull cycle has been started from here, so this is the first leg. Probably we got a reversal from here. And then the first leg, maybe probably was being continued at various locations. Just try to mark those locations. I'll just go through this part quickly because we need to understand the other important parts also on those parts on the bull cycle and how to do the intraday trading also, right? For example, yes, this was the low, then probably this was the high, then market did come down. Here we got a reversal, so this is somewhere around a reversal part. From here, the market did go up. So whatever happens during the first leg, we always see a reversal. Now this one we clearly see maybe there in 15-minute chart or 30 minutes chart, right? If you go into that, you'll be able to find out the price exact price action happening exactly, right? But prima facie, this is how the market works, right? So what happened is we got this first leg completed, and from here the market did go up as per the direction, right? Now going on the bigger parts, right? Starting from here till this top, we had this first leg formed on daily, right? There are first leg, second leg, third legs formed on 15-minute chart, 30-minute chart, an hourly chart, or maybe 2-hourly chart, right? But prima facie, we need to try and see this on intraday basis. I mean, not on intraday, daily basis, right? So this is the first leg which has been formed, right? Now what I've done is I've marked this as 0 and this as 1. The coordinates have been marked at the center level, right? So what we saw is we saw a reversal which was just below 0.5 level, right? And if we again try to find out the details of those parts, I have just marked this over here, right? See how the reversal does happen, right? So we had a high, the second day there was a low, right? Now it's not necessary that the market will be directly going down, right? So this was the high, this was the low, and we got a reversal over here. Now the reversal is again coming to somewhere around at 0.5 level, right? It just went across those points, and again over here we started moving down, right? This is how it happens. So we get this first leg, a reversal leg, and the market does go down. So here it completed somewhere around 1.272 level, right? And again this 1.2, see, because what happens is we are not able to know exactly where our reversal point would be coming. So if we try to chart or maybe trace this reversal, we are able to know that either it will be coming at 1.272 level or 1.618 level. And then it depends on the price action, that how we should be trading. Now example, let's say I am trading on this part, right? I know this has happened. I'm not very sure this part, how it would be going further. So I wait for this reversal. And once I get this reversal, probably I'll be able to go for a trade in the reversal because I know that, okay, for this leg, I haven't got a reversal, right? So this leg is completed. And also from the price action, we know that, okay, the market won't be directly just going up because this candle is being formed. We know that, okay, it will be coming down. It won't be just directly going up from here. It may happen that, okay, from this part, because we have got a 50% reversal and this may start going up. But here the closing has not happened above this 0.786 level. Understand this. This is very important because we need to understand how the closing does happen for the market. The closing generally signifies and tells us which direction the market would be going. I hope I'm clear about this. This candle, see, it did touch above this 0.76 level or nearby to that, but the closing did happen on a lower level. So by this, the probability of the market going down increases, right? So we got a reversal over here, and from here the market did start going up, right? So what was the target? If I go and take an entry at this part or maybe during this day, because it has crossed the 0.5 level, My target is either 1.272 level or 1.618 level. It depends on the price action, because let's say if I've taken an entry over here, the market has started moving up, but from here it started moving down. So best thing is, if I have taken an entry for long, or maybe for 3-4 days or weeks time or 2 weeks time, I can wait till the target of 1.272 is completed or it moves above this one level. And then probably I can just start trading my stop loss accordingly. So you can close your trade either here or either here. It's not necessary that we should be taking it up, right? Because we don't know how far it would be going. It may happen that it can just, we have to exit over here. It may happen because we don't know what would be happening further, right? So this is how market does generally have a pattern which is being formed, right? Let's say further what happens. So the market did go up, probably it started going up, it did come back, and probably from here again it did go up. So the cycle of 1.618 was being completed. Once we see that the cycle is being completed, it gives us a confirmation that the first leg, this can be called as the first leg for the weekly chart. This is the first leg for the daily chart, and probably this first leg is there for 15 minutes, 13 minutes chart. Understand the difference, because the 15 minutes, 30 minutes chart together makes us a first leg of, let's say, the daily chart. Nihal, if you don't want to listen, probably you can just exit from here. Thank you. Right? So this was the first leg of 13 minutes, 15 minutes chart. This was the first leg for weekly chart, and this was the first leg for daily chart, and this was the first leg for weekly chart. Yes, someone had a doubt. Someone has raised their hand. Someone had a doubt. I guess they had just raised their hand. If you can just unmute yourself and ask your doubt. Okay, fine. If you have a doubt, please do ask. We'll go further till that point. Right? So we went further. As I told you, coming back to the same point, this is 15 minutes, 13 minutes first leg. This is daily first leg, and this is your weekly first leg. Always understand that once a cycle is being completed, right, it will give us a reversal. Now, again, it's not necessary that it will be giving us a reversal. It will be giving us a short reversal, probably just till 1.272, and it can go up if it is super bullish. But ideally, it should come back for a 50% retracement again, right, after completing a first leg, right? So what we see over here is, we got this first leg on weekly chart. Again, we got a reversal, right? Now I have again drawn a Fibonacci over here. Understand how this leg is being formed. This was the high. Again, it came down. This was the low. The next day, we got a reversal over here. So reversal was again more than 50%. And then from there, the market did start moving down. So this down had come down to again a level of 1.272. Right? So once we know, probably, see, I have taken a trade probably somewhere over here. So till this part, or maybe till this part, I can be bullish on the market, right? I can probably take my trade till here or maybe till here, right? But once this has come down, and probably I get an indication that the market is reversing for a 50% retracement, I can either exit over here or maybe exit over here or maybe exit over here, depending on the choice that is there. Because we don't know how the market would be reversing or at what point. But we at least know that, okay, fine, from this part till this levels, that is somewhere around, let's say we are taking this level, which is 8,300 level. So we had gone up to 9,300 level. So this is somewhere around 1,000 points, which probably you can get on weekly basis, right? And again, once this target has been covered, is been done, and probably from here to here, and after this I get a reversal. This is a reversal signal for us, telling the market is telling that it should be coming down, right? Again, this price action can be seen in the basis of maybe RSI and MACD, which can be giving us a confirmation, right? So this second leg was being formed. Now I will show you some thing which is important for us to understand how exactly things do function, right? If I see point to point basis, right? So considering this low and this high, right? The reversal has come down somewhere around at a level of 50%, right? So my 50% level is somewhere around 8,700 and the low of the market was somewhere around 9, low was 8,800. So somewhere around a difference of 100 points, right? When we see on a long basis, yes, this point is good enough. But understand, once you understand this two important part that, okay, this will be a first reversal, it will be happening, first leg of weekly completion. After that, we will be getting a reversal, which is generally a 50% reversal. If you want to go long, probably from this location, you should understand that, okay, this 50% reversal would be happening. And this does happen, right? So, which is not a good thing for option buyers if you want to go long. But probably if you have that patience for having this first reversal and second reversal, then probably you can go long, which I have taken risk from my side, right? And I have also put down my trades in the group also, right? So from here again, see, the market did go up, probably it created a leg reversal and then it started moving up. After it had completed this leg, we got a 50% reversal, right? So from this swing low to this swing high, we again get a 50% reversal, right? Same way the market does function, and this is how the market does function. So we need to understand the levels on the basis of that, which we can trade, right? Because this is an important part that we need to understand. If we need to do intraday trading, this is how we need to do our intraday trading, right? Now, how my intraday trade should be there is, first of all, I know this is the low and this is a bullish candle. Probably the next day I would be again taking a trade which is going to be there in upward direction, right? Once I know that, okay, fine, this probability of market going up is there and it is coming down, it will be very difficult for seeing the reversal, at least the first reversal. But once we know that, okay, fine, my Fibonacci levels are there and those levels are somewhere matching across, then again it becomes much more easier for us, right? I'll probably try to show this in the current levels which are there so that things would be easier for us to understand, right? But overall, this is how we need to play. Was first I know, probably see, because this is the first leg, so formation of the first leg becomes a bit difficult because we don't know what exactly will be happening after a long bearish trend. But yes, there are certain indications which are there in the form of RSI and MACD divergence, which we can track down. But yes, probably at this stages, it becomes a bit difficult to understand or track those, especially in the first leg. Second leg, third leg, probably things will be easier because we know that, okay, fine, the reversals are happening, right? But again, it should be important for us to know the closings, right? See, again, closing points are again very crucial. If we see the closing, it is 8244, 8281, 8281, and this point is 8275, which is very close. If it is happening above that, probably things should be giving us maybe a positive direction or positive indication that this should be going up or down, right? But if it is very close, then probably we should be taking an indication that the market would be going down, right? Here also the closing was somewhere around 8253, which was below this 8275 level. Yeah. So we should understand that, okay, fine, this may be probably going down further. If it is giving me a closing probably just above that or maybe 10-50 points above that, it would be a positive closing for us, where we can understand that, okay, fine, the market would be going up. Why? Because it has taken a support at the end of the day for going up, right? So it did go further and we got this reversals, right? Let's try to check down one bearish trade also, so that it will be giving us some kind of confirmations, right? And bearish trades you should be able to find out on the basis of price action also. I'll tell you how to find out on the basis of price action. Let's see our recent reversals which has been happening, right? So probably understanding over here, what we get is, we see that, okay, there are some kind of divergence which have been happening, right? So probably this was the high, this was the low, and after that the market has again started coming down, right? So this is again on the basis of daily charts, but we again are not pretty sure how this price action would be happening, right? So what we do is, we'll try to find understand how this candle has worked out, right? This is 19th of October. So let's try to go down to 19th of October. This is 15-minute chart. Right? The first signal of a bearish trend. See, as I told you in this previous chart, what we have seen is we had seen some kind of in daily, we had already seen that in RSI, we are getting some kind of divergence which is there, right? The value of this was 73.71 and here it was 72.38. So ideally it should be higher than this value, but it has come down. And if we see the price value, there is a huge difference. Here the price was the closing basis, or here the closing basis is 17,800. And even if we see this, it has been 18,400. So there is a huge price difference, somewhere around 800 points. And still the RSI is probably just below that. So ideally RSI should be above that, but it is not above that, it is below that. So this is called as divergence, right? Now talking about the price action, especially at this part, here we come to know that, okay, fine, there is a divergence which has been happening. Same divergence can be seen also in MACD, right? See, MACD, we are also been seeing that, okay, this level has not been moving up. Again, this level has been down below this level, right? So this divergence should be identified at each and every level, but the confirmation should be always in the form of price action. Remember this part. As I also said over here, what we need to have is the signal as well as confirmation. Signal we will be getting on the basis of RSI and MACD or other indicators. See, understand the name of that given is indicator, which are only indications which are there. But the confirmation has to be always in the form of price action, which is there. Now let's see how we get that confirmation of price action, right? So this is the daily chart. We go for a 15-minute chart also, right? Now what happens is 15-minute chart, probably we got a gap up opening, right? After that, let's go point by point over here, right? How to trade, because this would be crucial for us to understand how exactly we are going to trade, right? Whenever there is a gap up opening or a gap down opening, the first thing that we should do is at least wait for 15 minutes. The first 15 minutes are very crucial because first 15 minutes you get a swing anywhere possible, right? So what we saw is we got a low, probably after that we got a high, the market again started coming down, after that it again went up, right? So what happens is if I try to take trade somewhere around here, it would be very difficult for me to get into the market. But once I know that, okay, fine, I don't know, or I'm not pretty clear how the price action has been happening, I can then try to get into the trade. So again, if I just try to get into the details, right? See, the value had come down somewhere around just around 0.5 level, right? And it has crossed above one level, but it didn't go up much. It directly did come down, right? So what happened is I had this range which was being formed, and after that it gradually started moving down, right? So if we see in 5 minutes or maybe in 1 minute chart, we'd be able to understand that, okay, fine, this had probably given us a confirmation somewhere around at this upside point, and then it started moving on. Because it is almost 3 months, 4 months old chart, I'm not able to get into the details of 5 minute chart because it shows hardly for the last 3 or 4 months, not more, right? From here we went down. Now what happens is once it goes down, what we need to do is, ideally from our side, we need to have two charts. Two charts means we should have two Fibonacci's which are there. Now probably it had completed 2.618 or maybe 3.618, right? We need to again have one more chart which is for the day high and day low, right? Now I also try to keep from my side maybe swing highs and swing lows also. Probably that we'll be able to study in details, probably for other chapters, maybe we have only started with 3 chapters till now, but yes, in coming chapters we'll be able to get into the details also. Charts are there, sir. Everyone try to teach technical analysis after the chart form. As a pro trader, one should forecast what shall be going to happen so that it can keep the entry exit stop loss also. I agree for this part, sir. Everyone try to, okay, it's the same thing which is there, right? Probably that I can only tell on the basis of the actual live charts which are there. But yes, live charts you will be able to understand only once you understand how the price action has been happening till now, right? I'll tell about those parts also, because some of the trades were already given in the group also, right? So this was the high, this was the low, right? Again, what I saw from or probably what rather than I see, what we see in the charts is probably we got a confirmation somewhere around over here at 0.236. So again, it gives us a confirmation that the market would be going somewhere around on the upside, right? So we got this first confirmation for 0.236 of the entire day range. We got a second confirmation which is there for 0.5, right? Now, whoever wants to compound their trades or add on new trades, you can do at either 0.236 level or 0.5 level. These are the best levels which are there. See, because this candle, this close about this, and after that it did come down, the price action happened somewhere around giving a confirmation at 0.5 level. Again, it's not necessary that it will be crossing somewhere around or touching just 0.5 level. It can come down, maybe probably some kind of variation should be always there. But for us to take a trade is always much more easier at 0.236 level. Same over here. If we are getting this range, the most important part for me is once I get a range, probably on the top side or on the bottom side, I should be getting a trade somewhere around at 0.236. Why? Because first of all, this is a natural point that we saw as per the previous unit of technical analysis part, that okay, generally it reverses either from 0.236 level or 0.5 levels, right? So we are just see, because charts keeps on repeating themselves every now and then as per the natural phenomena which is there. So this is a natural phenomena that we saw that during the 4 bull and bear cycle, it had given a reversal only at 2 points. One is 0.236 and second is at 0.5, right? So this keeps on occurring every now and then, and the same things do happen, and they keep on repeating themselves, right? So same thing we see over here on the, maybe probably this is a 5-minute chart. It did come down, and again on this big chart, which is we can say about an hourly chart, again we are getting a reversal at 0.236 level. So this is the day high and this is the day low. So considering this as an entire range, we get a reversal point at 0.236, giving us a confirmation that the market will be starting going up, right? See, it has come down again. This was the closing. The market did come down and touch at this 0.236 level, which gives us an entry. Let's say I have taken a trade over here. What I can do is I can either exit, keep on my stop loss trailing and close over here, or probably I can close over here also, because we don't know how the market will be proceeding further. But once I know that, okay, fine, it has touched the 0.236 level and started going from there, I can just exit my trade. But for the best thing is just keep on trailing your stop loss further, because you will be able to get the maximum points by doing that, right? Second is, if you are an option buyer, you always know that, okay, fine, once it takes a reversal, probably half of your profit is just eroded in this 10-15 points. So it's much more easier for us to go for keeping your stop loss on a trailing basis rather than just waiting for a reversal. If the stop loss has been hit, no problem, but at least you know that you have made some or the other kind of profit from that, right? I hope I'm clear about this part, right? So we got a reversal over here. We can again take an entry over at this part, because my stop loss is again small. If I know that, okay, my stop loss is maybe probably going to be more than 50 points. Here it is going to be 15 points. For me, my strike price would be the next level. So I will not go for a strike price of 18. Probably if this ends, we can do one thing. We can just continue with our trade or with our webinar in next 10 minutes, because this is going to be a recording. So the recording time will be somewhere around 10 minutes it takes for the video to be there, right? So I take an entry over here. From here it starts going up and gives me a confirmation. So if this is my entry level, once it crosses over here, right, at this entry level, my stop loss would be just below this, right? That is the first thing. Once it crosses and gives me a confirmation at 0.5, my stop loss will be trailed to the cost, right? After that, it should cross 0.786. See here again, it tried to give me a reversal somewhere around at 0.236, 0.786, but it again did jump back. It didn't go to the previous level of 0.5. So if I keep my stop loss over here, I know that, okay, I'm getting some kind of confirmation. Or if it is nearer to 0.786, it should be just below 0.5. Why? Because by doing that, I at least know that I am keeping some profits into my pocket, right? So first, this is my stop loss. Second is, once it crosses 0.5 level, this is my stop loss at my cost, break even rather, including my brokerage. And once it crosses 0.5 and goes nearer to 0.786, I'll just trail my stop loss just below 0.5, right? And once it crosses and comes for a pullback nearer to 0.76 level, then I'll be just keeping my stop loss trailing to 0.5 level, right? Again, it tries going up, or from here it is not able to cross the day end, a day high, right? Sometimes it does happen that it just touches the day high or crosses above that and comes down, right? The best thing is, if you have taken a trade over here, keep on trailing your stop loss. Here you got a confirmation, here again you got a confirmation, it is not moving up, but probably after that it will start moving down, because we don't know till this candle what will be happening. Even if your stop loss has been hit over here, it's okay. Don't worry, because you have at least got those much of points with you, right? Now what happens is, if this is a high and this is the low, how to trade? Now see, this part is very critical. Once you are able to understand this part, things would be much more easier, right? So we got this high, right? From the bottom till this part, this is a high, right? So how many candles have been formed? 1, 2, 3, 4, 5, 6. 6 candles have been formed. So that is 30 minutes, 60 minutes, 90 minutes. So for 90 minutes, the market had just been around in this levels. I'm considering after this high. I'm not considering this last 2, 3 candles, right? I'm considering from the high. So what happened is, from the high, we got a low. The market did try to come up. Again, it did come down. Again, it tried come up. Now see the price action, how that has been happening, right? This is my level 1. I'll take this on the right hand side, right? See, this was my high, this was my low. It did try to cross above the 0.76 level, but it didn't go. After that, the price did come down. Where did it come down to? It came down exactly till 0.76 level, right? It won't be going or probably crossing my zero level. 90% of the time, it will take a reversal from 0.76 levels on. You can see this on daily basis, right? Whenever there is going to be a reversal, the market will try to be in this range for minimum 15 to 20 minutes. You do any kind of testing in your, even if you see in this last 2-3 days, the market has been reversing from the top, right? And you'll be seeing similar kind of price action which has been happening. Similar kind of price action. There won't be any kind of changes which are there, right? What would be happening is, probably if this is the high, which is 18,589, here again 18,589, here it has been 18,885, right? So what we should do is, if I have taken up probably a trade over here, I should be waiting, right? If the trade is going on for more than 30 minutes, so you should understand first and most important thing, that something big is going to happen, right? It would be either going up or it would be going down. The best thing which I try to do from my side when I see this kind of price action which has been happening is, once I have a high, once I have a low, after that, when the market starts going up, if I have taken a trade somewhere around at 0.236 level, that is 18,581 or 18,582 level, right? And after that, when it starts going down, I don't try to exit my trade over here, right? What I do is, once it comes down to 0.786 level, I also take down a buy call. This is just for safety purpose, nothing more than that. I'll tell you the reason also. See, either the market will be going down, or the market, going down or the market will be going up. These are the only two probabilities which are there. It won't be there in a range bound or maybe more than 60 minutes or 90 minutes, right? It has to take down a direction. Either it would be going up or it would be going down, right? So what would be happening? The best thing for me is either I will be hitting my stop loss on the top side or I will be hitting my stop loss on the bottom side. It won't be both hitting my stop loss on both the sides, and again it will just keep on going on, because I don't know the direction. Most of the time it does fall down, but at times when it is super bullish, it also tries to go up, right? So for safety purpose, what I do is I take a trade, which is a put call, and I also take a buy call, which is there at 0.786 level of the range, right? So this was the high, this was the low. If I take or try to understand and try to find out the exact details, yes, it has been coming to a reversal of 0.76 level. Try to do backtesting from your side also. You will try to also understand what exactly these levels have been coming to. I had done this backtesting almost for last 2, 3, 4 years, going into the details for every 1 minute chart, 5 minutes chart, 15-minute chart, all of them. So probability that I found out is it generally does a price action in a very similar way, nothing more than that. So that's why I first of all used to have already a put call or maybe only a buy call. But now I've tried to take down put call as well as buy call also. Why? Because it gives me a safety that okay, for what will be happening is probably I'll be losing 1,000 rupees over here and 1,000 rupees over here, not more than that. But when the trade will be going in one specific direction, I am getting huge amount of points. Let's say, for example, here it is 18,580, which is, let's say, 18,900 from 18,600. From 18,600, even if it is just crossing below this low, it is 18,400, so which is almost 200 points. And 200 points is really huge for us. Right? So always understand how the price action does happen. Here probably you'll be just losing 1,000 rupees on the bottom side or 1,000 rupees on the bottom side, top or bottom, either of them. You won't be able to lose both of things, right? Because I have taken my trade around at 18,560, and here it is 18,580. Now it does happen that people will say, why don't we take this on the breakout also, or maybe when it comes down, or after that it gives me a back test, then also we can do. Yes, you can do that also. I also try to do that, or probably I just try to add that on the basis of that, because see, after that, the move which is there, this is going to be just zooming across. You won't be getting that time to get into the trade also, right? So maybe if this ends, probably we'll just start after 10 minutes. I hope everyone is fine with that, because we have got what, less than a minute now. And
Okay.
what I think is we should continue this in the further session also, because this is going to be very important. We haven't come down to the intraday part till now. We are just talking about the daily reversals only till now. We have just started with the intraday part over here, right? So it will close, and probably it is 9:45. We will be somewhere around starting at 9:50 or maybe 9:55, not more than that, right? So whoever wants to join in, please do join in. I see somewhere around 30, 31. Anyone who has any kind of doubts? Remaining minutes is just 2. Okay, thank you so much for that. I have also been seeing that same link. Yes, it will be the same link which will be there. No changes in the link. Please mute audio. Why no sound? Okay, someone else. Okay, thanks. Thanks, Kash. So it's because less than a minute, less than 2 minutes, probably we'll just try to join in again in some time. So I'll just try to probably stop over here, and probably we'll be getting some extra time then.